George, so I'm going to just pick up on some things that you mentioned in your introduction. Sure. So, George, first of all, about AI. Do you see AI as a threat to the industry, as well as obviously, an opportunity? But on the kind of threat side, we have ESMA, which is the European Securities and Market Authority, the regulatory body. What are the specific risks that it's identified with AI? That's one question. The second one is because you talked about crypto and the implementation finally of this market, MiCA legislation has finally come into force. So do you see crypto emerging as a safe asset class for investors following the implementation of this legislation? So two questions. First about AI regulation, and secondly about crypto.
Yes. So let me start about AI. Rightly, as you pointed out, it's a technology that certainly will bring lots of opportunities to the industry, but at the same time, with any type of technology, we have, and as regulators, it's our obligation to think about also the risks. I can tell you that at the moment, we're at a very early stage for that. What we are doing, and I should mention here that I'm also I'm chairing the risk standing committee of ESMA, basically. So one job of the risk standing committee is looking at all types of risks related to new technologies. So at the moment, what we're doing basically is we're collecting data. So we're doing surveys among all the NCAs and among ESMA basically to understand basically where is the use of this technology. Is it on the trading side? Is it on the post-trading side? Is it on the perspective of the fund managers, how they're using this technology? Then once we have these analyses, once we have this information, then we can start identifying what are the risks and how we can mitigate those risks. So we're at an early stage for that. There is the AI Act that was put in place at the European Union level a few years ago. But that's not necessarily about the financial services industry or the capital market. It's a more general. But one risk that I see over here, it's basically one major risk that I can see basically is the AI has certainly the potential to amplify existing biases. So it's based on the data that you feed the particular model. So if the data that you're feeding it's not reliable data, it's actually biased data, then AI will amplify those biases, right? So that's a danger basically, right? So, but that's just one of the dangers that we see basically. And obviously, there's also the dangers related to scams and frauds and investor protection issues. Now, when it comes to cryptos, first of all, I think it's a very good thing that European Union decided that this market needs to be regulated. And this is a process that started many years ago with the writing up of the markets in crypto asset regulation, with the trialogues, with the voting at the European Parliament in the summer of 2023. There was an 18-month period for all of us to get ready for that, for all the NCAs, for ESMA. There has been a lot of work, a lot of training, a lot of internal training, and a lot of training at the European level to be ready for the introduction of this regulation. The introduction started in January 1st. There is a lot of effort at the European level to make sure that we get it right from the beginning. So there's a lot of scrutiny on the authorization process to get it right at the authorization level, because that's the key, basically, to get it right at the authorization level. And whether it will be a safe asset, no, it will never be a safe asset. It will be a volatile asset, basically. But the important thing is, but it could be an alternative asset class. It can actually bring diversification benefits to a portfolio. But the important thing is to make sure that investors are protected. And this is the idea of the regulation, that it puts in place a very tough regulatory regime where basically all the areas where there is conduct of business, prudential governance, market abuse, AML practices, everything will be scrutinized and regulated, which is a good thing for the industry.
Okay, thank you. Yosef, you can respond to any of these things on AI if you want to as well. Yeah. So maybe first, and then I'll ask you a question.
Okay, yeah. So I also like to say a few words about the AI, because I think we all understand that AI is here to stay. There is a revolution in the financial world, and the AI is bringing a revolution to the AI world, and it is here to stay. And I think the one that will lead this revolution, of course, is the industry. It's not the regulators, but there is a very important role of the regulators. And I want to talk a little bit about the way we see it. So regulators, I think we're always in between, because from one side, of course, we want innovation, new technologies to come. But on the other hand, regulators are more conservative, think about, of course, client protections, customers protections, hesitate from the unknown things. And this is particularly very sharp when we are talking about AI, because there are great opportunities in AI. Take just, for example, the opportunity to retail investors to get a very good and expert advisory, which is not open to them today, and with very low costs. Is something that I think we could never think about it 2 or 3 years ago. This is from one hand, but on the other hand, of course, it challenged some core assumptions and method of the regulation that makes us we have to think about new ways how we are doing our regulation. And what we did in Israel, we nominated a task force with all of the relevant all of the financial regulators, and we just published an inter-report few months ago, I think a few weeks ago. The main goal that we had, and in this task force, the main goal of this task force was how to promote innovation and try to make Israel a place, a hub for innovation for AI in the financial tools, financial services. And I want to explain our way of thinking through one example, one recommendation, example of one recommendation. There is one big issue in the AI is the question of explainability, which means we demand from the AI tool to explain every single decision that it takes, or gives, or advice, or whatever. And I think this is something that reflects the dilemma I was just talking about, because from one side, of course, if you are looking from the investor's point of view, they would like more explainability. It will help them to understand, help them to appeal if they want. But on the other hand, the core characteristic of AI is the black box, which is not coming together with explainability. So what we decided, or the recommendation we had, is that we will limit the demand of explainability only to major decisions, and leave the day-to-day business of the AI tool to be with demand for general explainability, but not specific explainability to every decision or advice the AI tool is giving. And I think that reflects the way of thinking, or the way we look at the innovation and promoting innovation in AI tools in Israel. And I think together in Israel, we also have very good ecosystem. We have very strong tech industry in Israel. We're very early adapters of technology, and I think all this together can make Israel, and should make Israel, a hub for innovation in the AI field.
Great, thanks, very helpful. Well, just one quick question, because we are up against time. I think your main message about the resilience of the Israeli market came through loud and clear. But I wanted to ask you what you expect for the remainder of the year. I mean, there seems to be this wave of IPOs in Israel, in the Israeli market. Is that the case? And what's
Yeah, so I just in one word because we're out of time. So we do see in Israel some kind of wave of IPOs. The capital market is, as I said earlier, is strong, and we see from the beginning of the year, a lot of companies are coming to, some of them huge, some of them from the real estate, but not only from the real estate, from all over. And of course, this is something we expected will continue during the year.
Okay, thank you. Okay, Mr. Fekkas, just to pick up on a few things that you said. You spoke quite passionately and strongly about building trust and empowering citizens as long-term investors. But in practice, what would you say then is the most important or most urgent policy change in your jurisdiction or even in the EU? To make that happen, to make that shift, not just aspirational, but actually really happen.
So let me be clear. The single most urgent policy shift we need, both nationally and at EU level, is this: to create a simple, transparent, and tax-efficient long-term saving product available across the EU that citizens can trust and actually use. Why this? Because the status quo now is not working. We speak of financial inclusion, but most citizens do not own investment products. We talk about green and digital transition, but very little household capital supports them. And we design regulation that are sophisticated, but not citizen-centered. This gap between policy, ambitions, and public engagement is the silent threat to every long-term strategy we propose. And how can make this? A single digital account offered by licensed intermediaries. Citizens contribute monthly, tax incentivized just like they do for pensions or housing. The funds are invested in a diversified portfolio according to the citizens' risk appetite. Let me close with this. We often talk about innovation, regulation, integration, but if we don't bring the citizens to the center, not as a slogan, but as a design principle, we will continue building capital markets that look beautiful on paper, but empty in practice. Let's give people a product they can believe in. I believe is the most urgent and meaningful shift we can make.
Thank you very much. We're going to have to close it there because we are over time, but thanks very much, gentlemen, for presenting to us and for answering these questions. Please join me in thanking our panelists.